Hey, what's going on, guys? Bot Mentality here, and today I want to talk to you about Beyond Meat again. This one has been an amazing payer over the past couple weeks, really. We've had a lot of volatility from $45 all the way up to $186, so I've been having a lot of fun with it over the past couple weeks. If you haven't seen yesterday's video, I recommend you go ahead and check that out. That's where I made a little over 2,500 bucks trading it here on this insane parabolic day. I made money on the long side and on the put side, and then I also took a put position and swung that into today, which is what I'm going to talk about and kind of give you guys the results and show you how that worked out. So let's go ahead and jump into it real quick. So here's what we got here, guys. We had this huge parabolic. In yesterday's video, I talked about how I took the calls and took the puts, and then I sold the calls, sold some of the puts, and then swung a different strike I had, the 120 strike, into the next day. So the reason why I wanted to swing that is because a couple things, if you remember from yesterday's video. The first thing is I knew I was going to bank on one side because the implied volatility was so high. This thing has massive range, and I knew as long as I had both sides, the one side would pay for the other side, right? So in this case, I had the calls, the 180 strike calls, and I banked on those, $2,300. And then I turned back around. I had the 150 strike and the 120 strike puts. Well, I sold the 120 strike puts, made some money on those, made 200 bucks on those, and then held the 120 strike into the next day. So the reason why I did that is because it didn't matter if we kept going up. I just got long again and held the 120s. I wouldn't have got rid of the 120s. I would have held them because they're RTZ. That means risk to zero. I would have held the 120s. I would have looked to make money on the upside on the calls, and if anything, load up more puts for the pullback that would come in the future. When I take a position like that and I make a ton of money on the calls, that pays for my puts, the max loss on the puts. So I'm not going to get rid of them. Why? Because even though, yeah, we sat here and chopped into the close, right? We could have just as well continued up and saw a gap up and moved up. But we didn't. We ended up gapping down. So in that scenario, I would have been able to bank on those puts, which is what I did. And so when you take a position, if you say it's going to be RTZ it. Don't cut it. Hold that thing. It's either going to work or it's going to go to zero. And today I held it and it worked. It worked a lot. So what ended up happening this morning, if you didn't see the news, was Beyond Meat came out and JP Morgan said that Beyond Meat is beyond our price target, which I thought was hilarious how they phrased that. If you remember, they actually downgraded this thing this morning from overweight to neutral, which essentially their initial price target was $120. So this thing, sure enough, went straight back to 120. Now, I didn't think it was going to do that, which I'll explain here in a second. But what I knew was we were extremely weak pre-market, and we saw this wash to the open, a slight little buy up right here, and right at about 145, I took off my 120 strike puts. So if you remember, I got 6 of the 120 strike puts at $1.50, had about $900 invested on these. I swung them over because remember from this day, they were RTZ. I was swinging them. They're already paid for on the calls that I banked on, so they're either going to work or go to zero, right? So I had these. I bought them for $1.50. Today I got out at $3.60 on those. That was right here at about 145 at the open. And as you can see, I made $1,260 on these. So it was awesome. It was great. Very successful swing trade. That's what I was looking for. So the first day, banked on the calls, banked on the puts, held the puts, banked on the puts again. I am very happy with BYND, guys, overall. I've been shredding this thing over the past couple weeks. And again, guys, if you are interested in just being able to talk with me, to talk with other traders who are real traders, join my room, guys. It's super cheap. You're gonna get a lot of value out of it. And it's just, I'm trying to build a community of real positivity and real traders who are looking to make consistent money in the markets, not people who are just looking to sit here and just, roll the dice and buy as far out of the money as possible with as much money they have, right? I'm looking for people who are looking to sit down, actually come up with a process, have calculated risk, and want to network with other people who are doing the same thing with the goal of being full-time, right? So if you're interested in that, there's information on my Patreon. It's $25 a month, guys. Come and join us. But okay, enough of that. So here after the open, right, I sold those for $1,200. This is what I saw. I want you to see. Well, I saw us pull back here on the 135. We're down over 30 points on the day from the high up here at 175. Right now I'm thinking, okay, we could bounce. And that's why I wanted to get out of my puts. We could definitely bounce. With this many shorts and this much range, we could see a bounce. So what did I do? I went ahead and bought some more RTZs. I bought the 160 calls. I'll show them to you right here. I bought by the way, that selling these at these 120 puts at 360 was 140% gain. But for looking for the bounce, I bought one of the 160 strike calls for 275. Both of these, the expiration is this Friday, by the way, the 14th. So I bought these for $275, invested, just one contract. So what does that mean? Even if these go to zero, guess what? I'm still up. I'm still up about $1,000. So that's how you have to calculate your risk, guys. I wouldn't have gone and gotten $1,500 worth of calls. That's just not how I trade. If you get a big win like this and you're looking to take the other side, take it RTZ, take it with small size, and make sure that your gains pay for it. So there's no risk to you, right? And that's exactly what I did. I bought the 160 strike. Why? Because I bet a bunch of shorts piled in here at the open. It'd be so easy for them to hold it here around 135 and rip up towards 150 to 155 before turning back down. That didn't happen. I didn't cut the puts. I'm still holding them. So remember, the max loss on these I can have is $275, and I'm totally cool with that. I'll hold them all the way to zero till Friday. But if we get a bounce, they're going to work. If they work, I'll go ahead and sell them for a profit, and I'll update you guys later in the week. But that's the one bullish position I took on BYND. As you can see, we did not get that strength. We didn't get that strength here. We continued to break down and see lower highs throughout the day, almost all the way back down to the 120 strike. So major bummer there, because if I would have held my 120 puts from the morning into the close, or at least right before the close, wow, I would have made an extra couple grand on those. It would have been sweet. But I was not betting on that. After seeing a 30-point down move, I'm taking my profits, and I'm looking the other way to see if we end up getting a bounce. So we sort of infinite dumped right here is what I call it. But that's about it. That's really my trade, guys. I'm just checking my notes here, make sure I went over everything. Another point I wanted to make was when we saw this wick here, the puts weren't up as much as I expected them to be. I was expecting the puts, and I bought them at $1.50. I was expecting them to open around $5 or $6. We didn't hit that until here near the close. So that's another one of the reasons why I wanted to go ahead and take profits on those, because if we would have bounced, if we would have ripped back from 145 to 155, I probably would have been only up $100 or $200 if that sort of lack of the prices increasing on the puts, if that continued on the upside. If I didn't get, basically what I'm trying to say, we didn't get a huge acceleration to the downside and an increase in premium on the puts, if we bounced, I was going to see the opposite of that. I was going to see a drastic decrease of the puts. So I wanted to go ahead and get out of those things. It wasn't until down here we even got close to my initial price target on those puts. So that just goes to show, if you're not sure about the situation, go ahead and take your profits and then watch and see how it plays out throughout the rest of the day. But I don't think we're done here on BYND. I definitely plan on doing some more technical analysis on it in the future. And you better believe I definitely plan on playing this in the future, guys. This one has been a great payer over the past couple weeks. So I will update you guys on the RTZ I took on the 160 calls if anything tends to happen. Otherwise, I am not opposed to taking the put side if we get an amazing opportunity. It's just at this point, I'm just holding on to my gains, just sitting here watching and waiting, guys. And I will keep you guys updated. So that is all I got. If you guys have any questions, reach out to me. You can shoot me an email. You can leave a comment. You can hit me up on Discord. However you want to reach out to me, definitely do so. I'm on Twitter. I'm also on Instagram. So, all right, guys, continue to stay focused, which is developing the bomb mentality, which is the trading mentality. When you eliminate your emotions and you learn to trade like a machine, guys. I'm out of here. Deuces.